Hey, what's up guys? Sam here, and I'll be doing the premium video for Friday, June 13th, 2025. So another week is in the books, completely normal day with no unexpected surprises whatsoever. So let's dive in. Let's dive into the indexes. We'll look at some of the peripheral parts of the market, and then we'll see if we can, at best we can, get our footing for next week. So lots of moving parts around the world, certainly. Overnight, the market opened pretty poorly. Gap down, of course. Rallied pretty strong, gave a lot of it back, and just kind of stuck in the middle of the range here. So as we go along, I have another monitor showing 4-hour and 1-hour time frames. Whereas right now with you guys, this is just the weekly and the daily. And I'll try my best to reference anything that I see that's relevant on the smaller time frames. But at least for now, if we start here where we normally start, which is SPY, even after World War III, 4, and 5, we really have not changed in terms of the indicator. So the indicator here still basically the same as it's been for weeks now that we've been doing these videos, just improvements along the way, certainly. So the cloud here on the weekly, you can barely see it, but it's actually gone green. So that certainly helps. You still have your thrust here. The indicator is not showing trend at the moment. It may look like trend, but in reality, you haven't gone anywhere. So the indicator is correct in showing no trend. When it shows no trend, what do? You drop to the lower indicator and you trade in the direction that tells you to trade. If we look at the daily chart, again, even after a colossal news drop, you can almost barely even see it register here on the chart in terms of the action. The weekly candle itself is just pretty much nothing. It's not a great weekly candle. It is a little bit of a slight, I don't want to call it like a dark cloud, but roughly speaking, it would be. Unto itself, it doesn't mean much. You'd have to close next week below probably the midpoint. So you'd have to close next week below the low of this week, as well as below the midpoint of this candle here, to confirm any type of structural breaks. But on the daily chart, this is still a strong bull chart. Don't see any issues. Didn't even come back to the daily 21. So nothing really to change there on SPY relative to what we've been looking at. Let's go ahead and move forward with the Qs. Now, going back to SPY for a second, I did miss something here because I told you I have another monitor with 4-hour and 1-hour time frames. And on the 1-hour time frame, there has been notable damage. So that one actually does have some preliminary early sell signals. This is on the hourly time frame on SPY. And you do actually now have a downward thrust signal on the 4-hour time frame. So those two combination of signals can be enough to kind of topple it, but at least for now, it has not spilled over into the daily chart, as you can see. But be aware that from the inside out, there has been some damage on the 4-hour and the 1-hour time frame, and that will have to be very quickly patched up next week. Otherwise, we might get the unbelievable retest of a daily 21. God forbid. So here on the Qs, same thing, almost identical charts, a little bit more pronounced here in terms of the cloud being visible as having changed. It seems like I locked up my chart there. So you can see the cloud here is a little bit more pronounced. Same candle, same scores, same everything basically. So no major changes there on the Qs. Qs have the same problem. They have hourly damage. This actually looks rather significant. We haven't seen this hourly damage. Actually, let me show it to you. You should see it instead of just me or narrating it to you. Maybe daily and 1 hour should be the time frames that we're looking at, as opposed to weekly and daily. But you see here how on the trend oscillator, which is the go-to indicator for everything. It's the centerpiece of everything. You see how you had this big drop here, and then you had a big drop here, and then you had a relatively decent drop there. And the entire time, this is going back weeks, the trend oscillator stayed green above red. And then as of today, you actually have damage here. So again, when it says no trend, what does that mean? Well, it means you look below and you trade in the direction of that. So going into next week, despite the fact that the daily and the weekly both look completely unchanged from 1, 2, 3, or 4 or 5 weeks ago, from the inside out, you can see the signal is relatively clear, right? I'm kind of surprised it didn't break on this drop here. That's a pretty big drop. This was a pretty quick drop, but you see how those drops did not trigger the indicator, whereas this one actually has. So it increases the necessity for a very quick restabilization attempt by Monday, or at the latest by Wednesday. Basically sometime next week it has to find its footing and restabilize, otherwise that hourly signal will have to run its course. Let's look at the IWM. Not usually a ton here on the IWM that I care for, but let's just take a look at it. So IWM found resistance exactly where you would expect it, which is that red line. I still don't see much edge in trading this thing. As somebody who's watched a lot of tech trade lately, I can tell you that's still the predominant place to be. I don't see edge here. There's no particular reason from a score perspective to trade this. It's below the 200, where the other indexes are above their 200s. This one has a downward thrust signal on the daily chart triggered today, unlike the other ones. So I'm not seeing any edge here in the IWM. I rarely ever see edge in the IWM, so I try to just mostly ignore it. Let's jump over to HYG. Again, for those of you that are newer, we look at HYG as a metric for risk on or risk off. This is junk bonds. If the world is really going to end, junk bonds should be giving sell signals and selling off. And if we're all going to see many more sunrises to come, then this will be relatively stable. And as it sits, really there's nothing here to talk about. So not yet, at least. Neutral charts for the last 1, 2, 3, 4, 5 weeks. Nice little cozy box there that it's traded in. Like I've been telling you, if this thing, as long as this thing holds above 78 and 80, there's really nothing here to see. Things get really bearish for everything, not just HYG, but as a harbinger for everything, if it gets below 78. And I would get actually pretty bullish if this were to get above 80. With it in the middle here, closer to 80 than it is to 78, I would still give it to the bulls. The score would imply to do that. It's neutral, but it's a positive neutral up. But not a lot of necessarily strong clues coming from Mr. HYG here. Let's look at LQD. We never look at LQD. It's the better looking version of HYG. HYG's junk. LQD is investment grade, and actually junk looks better than investment grade, which is a little weird, but it does skew things bullish. And again, this one's not giving a whole lot away. You'd have to give above that red line there or below this low. So as long as it's kind of in this box here, not giving anything away, still leans bullish. So I would give them the benefit of the doubt. Let's look at ZN here. This is going to be just the futures contract for the notes. And I told you guys that I had been looking for a low. I actually showed it to you on ZB, so maybe let's re-examine that. And the recipe for a low is still intact. So I gave you a whole spiel about this candle there being the low because it had high volume. It probed the previous support, so it stopped everyone out. and it closed at the highs. There's three things you look for: high volume, probing wick below previous support, closing near the highs. That candle right here is still kind of the load-bearing candle for bonds. A little surprising here to see bonds red on the day. Again, this is more of just the spectacle, if anything else. The real clue, because here's why. If you could tell me ZB goes up, could I tell you what the stock market's going to do? No, not reliably. We've seen the stock market go up with ZB going down nonstop. We've seen the market go down with ZB going up. So, could I really tell you what to do here? You know, if the only instrument you could tell me the future of was ZB, could then I extrapolate that into the stock market? And the answer is frankly no. But just as a kind of closing the loop here on this conversation, you know, that candle continues to be a load-bearing candle for a low. And we'll see if Mr. Bonds here delivers next week with potentially the Fed. But at least for now, this doesn't necessarily help anything. Just because we never look at it, we'll spend just a minute here on the dollar. Again, the dollar is kind of the same thing. If you could tell me the dollar is going lower in this exact moment in time, could I tell you what Nvidia or Apple are going to do? No. No, I think in general, if the dollar is going lower, it is going to be beneficial for stocks. One thing that I would start watching out for here is the fact that you now are putting in a potential reversal. Right, so you see that potential reversal here. Very, very timid, very early stage, so I wouldn't take it too seriously. But if we start to see the dollar here get back above this line, then that sets a trap and could pretty quickly come up and test here. And I would imagine the stock market would not like that. So no real read there in terms of read back into stocks, but just for my own elucidation, I wanted to take a look at it. One thing that was pretty concerning to me today was the put-call ratio. You got all kinds of news bombs and whatnot, and folks could just not care less. The market is pretty ridiculously complacent. Now, what does this all mean? With a put-call ratio of 0.63, that's the kind of ratio you would see on a day that's like closing up 20, 30 SPX handles. Not on a day where, the SPX closes down 68 points. So what does it mean? Well, it tells me that even though the market dropped, nobody was buying protection. So what I would have liked to have seen is kind of a spike up here into this zone to show me that there's panic, lots of put buying. And then on Monday, next week, we can rip their faces off for having bought protection into a well-telegraphed, Middle East attack. But this, in fact, is showing me the opposite. This is showing me a wild amount of complacency. So that does make me a bit nervous. We did put on a short today in the room together. Shorted some 6,000 calls on SPX, did it as a spread, 6,060.20, and we did it pretty damn close to the high of the day, but I ended up closing it right before the close, just because, well, I'll be honest with you, the reason I closed it was because I don't want to spend my weekend hoping for World War III, right? Whenever you're short, you're just hoping for all the worst things to happen, and I don't want those vibes this weekend. So we'll see if that plays out, but if I were still short going into next week, this number here on the put call, 0.63 today, would give me a good reason to look to continue to be short. Let's move over to the VIX products. So far, I'm not seeing any major changes on the larger time frames. If we're just focusing on the larger daily time frames, I'm not seeing any major changes. On the hourly time frame, like I showed you, on the QQQ specifically, which I showed you, you do have the first break of the trend oscillator in like 3 weeks, at least, maybe longer. But the look back, and we'll probably close with that. Go back and look at that. But let's kind of wrap it up here with VIX and the VIX products. So one thing to be pretty careful of is when the VIX gets into these like really tight consolidations like this, especially when you kind of have like this rounded double bottom thing going on, you know, the double bottom there, and you go into a squeeze, it's very susceptible to needing to kind of breathe. And if it's going to be nothing, it basically looks like this. You see how it popped up? It just needed to breathe a little bit, got a little too tight, and then goes back into being really tight. So this is a little concerning, I got to admit, just because this is exactly the type of pattern that the VIX likes to spike out of, right? These like, because here's the thing, everyone is selling vol, like literally, that's like, that has to be probably the most popular trade in the world, is just wake up, sell vol, wake up, sell vol, wake up, sell vol. But at a certain point, you know, if you're selling vol up here, I think that's good business. I think if you're continuously pounding on vol, when you have these tiny candles that are very compressed near lows, that sets up the potential for a quick kind of stop run to the upside kind of thing. And of course, if VIX were to do that, that would pressure the indexes. So of all the things that we've looked at today, I would certainly have VIX pretty high on your radar next week, just because you have this like really, really tight consolidation here. You have the squeeze, and the necessity for this to breathe is definitely there. Now, maybe with it up 15% today, that was it. That is the VIX breathing, and then it kind of comes back down and kind of dies again until the next time. Or, you know, this time it actually decides to do the thing. I don't have an answer for you. Really what it will come down to is, well, what it'll come down to is whether the hourly charts next week get repaired very quickly or not. And as of right now, going into the weekend, they have certainly taken damage. Let's look at VVIX. So VVIX here you can see is significantly more advanced than VIX at the moment. You can see that this actually put in a formidable weekly candle with a weekly up arrow. So this is increasing the caution level, I would say, for longs, because the VVIX will move before the VIX. So if you're just watching the VIX and you're completely unaware of VVIX, you know, it's kind of a first mover kind of thing. And this is a formidable candle right there, right? Not only is that a formidable candle, it triggered with arrows, which, you know, is not going to be great. So we'll see if this one can come back in, but just making a couple mental notes here for myself in terms of things that I absolutely need to focus on. You know, Monday morning, it's going to be the hourly QQQ combined with hourly VIX, and to see what those do. If you start to see the VVIX come down and QQQ stay stable, then I think the potential for a rally is there. I think if you continue to see VVIX spike higher and you see the QQQ trading soft, then that can set up for a pretty funky OPEX for June. So let's do this. Let's close out with the view of the Qs here on the hourly, because this is what I think is at least what I'm going to be looking at. And I always try to bring you clean signals, right? So I would say that this is a signal that is very clean. And you know, I think maybe even a complete novice would see it, right? Is the green above the red? Is the green above the red? Is the green above the red? Yes, 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 until it's not. So this signal is the biggest concern that I see. You will not see a signal, in my opinion, quite just yet on a daily or weekly chart, certainly not a weekly, but that signal right there with the arrow pointing to it, it is significant. It goes back, it looks like at least 3 weeks, maybe more. And this is the first time that it's taken damage in multiple weeks, probably 4 or 5 weeks if I were to guess. So that'll be the number one thing that I'm looking at going into next week. If this can start to get restabilized, and it doesn't necessarily, you don't have to go up, it just has to stabilize and let the VIX come back in, and then the rest will take care of itself. Then I would be a little bit more comfortable with longs. If I were short going into next week, which I'm not, although maybe I should be, but if I were short going into next week, then I would just be looking for the opposite. I would say that if you're short, you have the P call in your favor, and you have the VVIX in your favor, and you have this hourly signal on the QQQs that I'm showing you in your favor. If you're bullish, then what you have is the daily and the weekly time frame have not taken significant, even notable damage quite just yet. So those longer term structures remain intact. So going into next week, pretty light. I'll have a defensive book. Not that that's helped me in any way. I love waking up having a utility stock and XLP staples on my book in the middle of World War II, 3, 4, and 5, and having the defensives get hit harder than tech. That's always fun. So defensives in this market should be thrown overboard. The defensives in reality tend to be the Palantirs and the Teslas of the world, it seems. So trade accordingly. But that will be my book going into next week. It's pretty light. I had a couple things that I had to manage today, which have aged me prematurely. I think I would have aged less had I just spent the entire week smoking a carton of cigarettes, as opposed to trading Tesla the way that I did. But all ends well. All's well that ends well. So going in next week, I'll be pretty light. Probably looking to stay pretty nimble. Start the week with some day trading. Really focusing back in on SPX with you guys in the room. I want to narrow my focus. I spent a lot of time this week on the mic with you guys in the main room, telling you to narrow your focus, kind of giving you, all the experience that I have built up over years in terms of just, this is where you find edge. This is how you push your edge. You have to narrow your focus, and then really only trade a handful of things that you're comfortable with, that you're familiar with, that have very high liquidity. And so I'm looking forward to starting to do that again next week. I'll be focusing on SPX and ES with you guys in the room. And then once we have the next clear signal, then we'll put on the next clear trade. But for now, just to recap, this is probably the most significant signal that we have come across this video. That one in the VVIX. Maybe we can even add the put-call ratio being under 1 as a signal. And actually, all three of those lean bearish. So take that into account. The larger structures remain intact. Next week we have Fed, and maybe world peace gets established on Sunday night. We'll see how it plays out. All right, guys, that's my time. Hopefully it was helpful. If you're watching this on the YouTube, before you go somewhere else and watch a cat video, drop us a like, drop us a comment. It does help us out. And let us know what you'd like to see for the next video, if you can't think of a comment. So that'd be helpful for me. I'll read the comments, and we'll bring you that stuff next week. All right, guys, that's my time. Thanks as always. See ya next week. Cheers.